Hey, this is Ben from Trading Experts, and today we're going to be going over the 4 stages lesson. Now, when you do start to learn how to chart read, the first thing we want to learn is the 4 common stages that a stock is in at any given time. The first is going to be the basing stage. The second is going to be the breakout stage, where we focus most of our energy. The third is the topping phase. And lastly, what we want to avoid the most is the breakdown phase. Today we're going to go over two stock charts that go over this perfect example of basing to breakout to topping to breaking down. Very textbook, but I want to remind you that again, every single stock at a given point is in one of these stages. Sometimes stages can overlap, but it's not always going to be as perfect as some of these examples. But these two have stuck out lately that give us a very good idea of what we're looking for, and hopefully you too in the task can go through and find stocks that you're looking at and be able to identify those stages. So the first thing we're looking at is the 10-year bond, which is the ticker TNX. Again, we're never going to be trading this, but this is just, it gives a very good pictorial explanation of the 4 stages. So as we see here, again, the first stage in yellow is going to be the basing stage. This is when the stock is consolidating, it's trading in a tight range. Buyers and sellers are really battling together. No one's really picking a stand of who's going to push the stock or the bond higher or lower. So as we can see here, in stage 1, this basing area, this is when the stock is just as we mentioned, just consolidating. We want to focus on stocks that are consolidating closer to the resistance level, where we can find these tighter entries, which we can start to see closer to the end of the year. Now, again, of course, this is much easier in hindsight, but again, it's just to help show you this example. So as we see here, we see the 10-year basing. We see it start to base tighter in here. And this is when we typically start to take more of a focus on the name and looking to find a way to get in when it does start to break out of that base and leave that first stage. We can see in this more vertical breakout, this is the stage 2. This is where we want to be involved. This is the meat of the move. This is when we're looking to buy the stock or sector as it's breaking out of its base and moving into this next breakout stage. We can see here, it gaps up, it breaks out, and from there, it turns that prior resistance level into support and continues this breakout higher. And this is where our biggest focus is, trying to find stocks right upon this break. Once it can break through that first stage, move into its next stage, and try to hold on as long as we can until we eventually get stopped out. So we can see, in the 10-year, for a few months, it just breaks out higher, exactly what we want to be a part of. And now this next stage starts to form. Now this is where, again, it's not going to be always as perfect as this example, where this stage 3 topping pattern could also become a new stage 1 base, where it could be flagging out here and setting up for its next leg higher. And that's where, again, in that same consolidation period of that support and resistance, if the stock or sectors continue to bang on resistance and get closer to this high, it's more likely going to head higher, and that could be a point where we even look to add to that position as it leaves that stage and goes back into a breakout stage. Now for the 10-year, this was the topping stage. It went too far, went nearly 70% higher in a few months. It was exhausted. We can start to see this stage 3 topping pattern, and then it starts to break down into support, and that's when we want to look to exit the position. So again, in this example, we're not buying the low. We're not buying down here. We're not selling up here. That's not the point here. The goal here is to get involved when the stock is leaving that stage 1 base, which we can see here. Try to hold on for as long as we can, and then we'll eventually get stopped out. And we'll say, as this pattern breaks down, it leaves that stage 3 topping pattern, it starts to break down, and we leave the position. In this example, again, the 10-year appreciated by 70% in this span of time, or even 80% at its high. We didn't buy it and sell it at the exact high. We got stopped out as it broke down through that stage 3 topping pattern. And in this example, you would have made, say, 50%. And then it breaks down, comes all the way almost back, and then we can start to see a new base forming as it works its way back towards that high. So that's where these patterns continue to repeat themselves over and over, and we can see here this base starts to form. Now it breaks back out again and works its way back to this now prior high. Then we can look at another example, this EXPO, another perfect example of this. So if we're looking at this chart, we can see the stage 4 breakdown forming from May to July, it puts in a high. That was the topping pattern. It enters that breakdown stage 4 down through that break of support, and it continues to break down. Then we can see after it gets, breaks down enough, it starts to enter in that basing pattern. And this is what we talk about again, how these stages can overlap. It's never going to be a perfect from a breakdown to a base to a breakout to a topping pattern. You can see that as it was breaking down, half of that time was still in that new base that was now forming. And that's what we're talking about, how these patterns can overlap, and we want to focus again on when it can break out. So when it does start to base here, we can see 92 has been resistance, 86 has been support. The more times that EXPO can continue to hit that 92 area of resistance, the higher probability with each attempt is that it's going to break out higher. The first time it's too early, the second time is that retest, third time it's still not ready, fourth time is the charm, that's the time that it breaks up. And this is why we focus, and you'll learn later on in the Pennywise lesson, or why we focus on buying above these figures. And for example, 92, we're looking to buy above 92 for the confirmation of that break of that base or stage that's currently in. And we can see as it breaks out of that base, it starts to break out. Couldn't ask for much more of a breakout than this one. Again, we're giving you the perfect examples in these two examples here. Again, it's not going to always work this perfectly, but here again, that focus is to buy up through that base as it breaks out after multiple attempts. It breaks out, you continue to trail your winner, and now this is when that new topping pattern or new flag could be forming, and now it's starting to show us that it more than likely is going to be a topping pattern, as it's shown us right here that it's breaking that support area, which is what we don't want to see in a name that's flagging near highs. So as we saw the stage 4 breakdown, we saw the stage 1 basing area, we saw the stage 2 breakout, and then we saw this new flag or base near highs, but it was again just too exhausted. This name had gone 30 points very quickly. It tried to consolidate this move, but it just didn't. The buyers weren't excited enough to buy this thing up through 120, and this is where we exit on the way back down. We're not trying to buy 92 and sell 120 and be perfect. We're trying to just buy through that break of that base into that breakout stage, and then eventually get stopped out when the name is showing us otherwise. So hopefully these two examples help show a more visual explanation of these 4 stages. And now if you can take the time, again, you can read those lessons and we break down a little bit further and try to draw out a chart that you're looking at where you can see these 4 stages and be able to read these when you're looking at charts as you continue to scan through this program. So I hope this lesson helped, and good luck on the rest of the challenge.